Welcome back, and would you know it? Michael Saylor says they will not post the proof of reserves for the Bitcoin that MicroStrategy holds. That's one of the many topics we're going to be discussing in today's video. Along with, guys, there is so much happening in crypto. This is another indicator that we are in full bull mode at this point. We may not see it in all the prices across the board, but guys, the market being in bull mode doesn't mean that we're immediately going into upward trajectory, and it doesn't mean we're how long we're going to be there. But in today's video, we're going to be exploring what's happening with Tether, what's happening with Circle, because now they're IPOing. We have companies that are now going to be buying Ethereum for their treasuries and much, much more. But we're going to be starting right here with the $500,000 price prediction for Bitcoin. This is the Cryptoviser podcast. Make sure you guys are subscribed to the channel. That way you never miss a new video. We upload every single day of the year to bring you the latest happening in the financial world. Also, give the video a thumbs up, hit subscribe, join the channel by clicking join if you want to help support financially, and let's get right into today's video.
The bottom line is, I think, I think we're easily in 5 years' time, we're easily at kind of 300, 500, something like that. But if it, you could get a swing where it just goes much, much higher than that. Do you know what I mean? I mean, it's entirely possible that we have oh, here we go. Yeah, it's on page 293 for anyone following along with me. So the 5-year power line model shows the trend line in 5 years, and this was from last year, so maybe you'd have to move it up a little bit from this. 5 years would be at 326,000. But this is interesting. One standard deviation up is 667,000. Two standard deviations up is 1,853,000. And by the way, Bitcoin has traded at two standard deviations above its trend line mean, many times. So not many times, but in each cycle. I think there've been 5 of them. And then one standard deviation down is 180. So, in 5 years, I mean, I could easily see it be $500,000. In 10 years, the trend line is $1 million.
Now, here's the deal. We're not going to 10 years out right now because that is way too much to be thinking about. But listen, guys, this cycle, we are already in full bull mode. All the companies are buying billions and billions of dollars of Bitcoin every single week. We have countries talking about it, companies talking about it, everybody's talking about it, and we're only at $110,000. And by the way, the Bitcoin ETFs, they've acquired $100-something billion worth of Bitcoin. MicroStrategy, 580,000 Bitcoin, which is like $60 billion, something like that. And so this all happened within the last year and a half. Will we get a supply shock at some point and the price will go parabolic? Yes. When we go parabolic, that is either the top or very close to the top for this cycle, in my view. And again, Josh Mann, who is the really good trader who basically was trading MicroStrategy, he turned a $2 million portfolio into a $30 million portfolio. And he's saying he believes that we're headed towards $444,000 and then $444,000 down to $84,000, and that's an 81% decline. But Joe Burnett, who is director of market research at Unchained, he said it feels like it's about time for this reminder. I think we're on the cusp of a parabolic bull market. However, I think Bitcoin will eventually crash around 80% again. Nothing on earth is perfect, including Bitcoin. And yeah, if we are in a parabolic bull run and we do start seeing that, as Raoul Pal calls it, banana zone or next leg up, yeah, this is the leg to sell into because this is the liquidity. This is the exit liquidity, guys, for the cycle. It doesn't mean that we're not going to continue to see buying. It doesn't mean that Bitcoin is going down forever. What it means is all of this money that's flooding the market, somebody's on the other end selling. And they're using the new money coming in as exit liquidity to sell high and then wait to buy low. Why all these companies are buying at all-time record highs, I can't answer that question for you. Why your next door neighbor is going to start buying Bitcoin, or your cousin or your sister or your whoever, your coworker, they're going to call you and say, "Hey, should I buy now at $444,000?" Right? And it's like, why are they buying now instead of $10,000, right? And so this is where you have to look at these as potentially top signals. And I'm not saying we're there, but we're we're close, guys, because look, Florida just proposed eliminating capital gains taxes on Bitcoin. If passed, it would make Florida the first US state to offer this kind of tax relief. But wait just a minute, guys. Wait just a minute. In Florida, there is no state capital gains tax. Residents are still subject to federal capital gains tax. But capital gains is not taxed in Florida at the state level. So we're seeing everybody talking about this and cheering it on, and it's like, wait. But they don't even have capital gains tax on Bitcoin as it is. So what would this do? Just solidify that it's not going to be added for Bitcoin? Doesn't make sense to me. Anyway, also, Teddy Bitcoin said, you guys watch Metaplanet shares 2 to 4x in 10 days, and you didn't sell? And this is what we keep talking about in this cycle, right? Metaplanet went from $2.50 to $15. And when it got to above $10, these people who bought down at the $2 range, they completely forget where they bought at and how high they've gone, and they don't sell. And that parabolic run is the top. That is the exit liquidity. That's the people who bought down here selling up here. Not everybody, but a lot of them. And so the same thing is going to happen in Bitcoin. Same thing is going to happen in the altcoins, especially because we're so far along and the markets haven't really performed extremely parabolically as many people anticipated. And so a lot of people just want to get out even or a little bit in profit, or at least just not in the red. And so there's the potential that we can't go that much higher, because every level that we move higher, people are going to be selling into those moves because they just want to get out of the position. Because if we do head into a bear market at some point, those are going to go even lower than where we're at, right? And so, now we're hearing also, by the way, SharpLink has now launched as an Ethereum treasury company, tapping Joe Lubin as a board chair. And we know Joe Lubin is the co-founder of Ethereum, and also I believe he's the director of Consensus, which is one of the main development companies. And effectively, betting platform SharpLink Gaming has launched an Ethereum-based corporate treasury strategy and nominated Joe Lubin as chairman of the board, according to the company. They said that the publicly traded company on the NASDAQ entered into a securities purchase agreement for private investment into the public equity worth $425 million. Consensus was among the investors. Joe Lubin said, on close, Consensus looks forward to partnering with SharpLink to explore and develop an Ethereum treasury strategy and to work with them in their core business as a strategic advisor. SharpLink's gaming stock is up approximately 400% at the time of writing, changing hands at nearly $33.50. Now let's take a quick gander here at where it's trading at now. And again, these parabolic moves, just based on an announcement before they even do anything, these are indicators that we potentially are peaking out, right? I mean, they're buying, they're going to be investing 400. Look at that. This is a parabolic move. This is a parabolic move. $3 to $30. It's a 10x, literally overnight. $3 to $35. It's a 10x. And by the way, people will still not sell here. I mean, granted, it's only $24 million market cap, but I would have to do a lot of digging into their SEC filing for this potential purchase. Because if they are making this purchase and they're going to be purchasing $400 million in Ethereum right off the bat, this is a very undervalued stock currently. Even though it already 10x'd, because it's still going to at least 10 or 20x from here. 10x from here would be $245 million. 20x would be about $500 million. So that would kind of be more in line, getting about a 20x from where we are now. And it already 10x'd. Wow. Pretty incredible. Anyway, we know Ethereum Maximalist said, did MicroStrategy of Ethereum just launch $425 million in net Ethereum buys, an Ethereum treasury strategy, blue money gospel conviction? What the hell does that even mean? Blue money gospel conviction? Okay, maybe this is why nobody's doing this with Ethereum. Anyway, backed by consensus, and the public vehicle is SBET on the Nasdaq. Others will follow. And then, by the way, Sam Tabar, who's the CEO of Bit Digital, which is a Bitcoin mining company, he said, "We have more Ethereum on our balance sheet, more than any other public company except for Bitcoin." So that's interesting. Probably a lot of people didn't realize a Bitcoin mining company is owning Ethereum, but they are. They are. So take a look at them. Bit Digital, I think it's BTBT is the ticker. Anyway, so we have a lot going on here, right? We have $500,000 predictions. We have reminders about the parabolic bull run. We have news about things that are going to be law that were already the law. We have Metaplanet doing 2 to 4x in a day. We have SharpLink doing 400x in a day, and probably people are not selling. Um, and what else is going on, guys? Something's going on with USDC, and it's very, very interesting. USDC usage on Ethereum has reached all-time highs. USDC on usage, you can see in this chart, outstanding monthly transfer volume is just about $700 billion. And you can see that's USDC on Ethereum. The red line, the white line is USDC on Ethereum as well. This is the monthly transfer volume, monthly transfer count. All-time record highs. And this as Circle has now moved forward with their initial public offering, their IPO. As part of their 24 million share IPO, Circle will be offering 9.6 million shares of their stock, while selling stockholders will offer the remaining 14.4 million shares. And so this is interesting because we heard that Ripple was trying to buy Circle. We heard that Coinbase may potentially have been trying to buy Circle. Then we heard Charles Hoskinson cheering on Ripple buying Circle because then Cardano potentially would get USDC, even though it still doesn't have RLUSD, which is Ripple's current stablecoin. But anyway, apparently none of that is happening. Circle said that they're not for sale. They're moving forward with an IPO. They're not for sale, other than that. And so that's probably not going to happen. What this means when Circle goes public, I don't know. But let's kind of take a little bit of a deeper dive into the Circle IPO filing. Now, the one in OMZ, Omar, who's a investor in Dragonfly, he said nothing to love in the Circle IPO filing and no idea how it prices itself at $5 billion. Gross margins are getting crushed with distribution costs. The core US market is being deregulated and banks and financial institutions are about to crash the private party. Spending is over $250 million a year in compensation and another $140 million in, I guess, general and administration or something like that. They're spending $250 million a year in compensation. That means pay. Okay, so let's just say 15 million of that. Let's just say 25 million of that is executives. So the rest of it is 225 million, right? So if we divide that by like an average salary of, let's just say $250,000, I mean, that's a lot still, but let's just say that means they have 900 employees all making $250,000. Doing like, where's all the money going? Like, do they have that many employees? I don't know. We would have to look at all their reporting. But anyway, the core income drivers and rates already topped and are heading lower, right? We know that the Federal Reserve is about to cut rates. 32 times 2024 earnings for a business that just lost its mini monopoly and faces several headwinds is expensive when growth structurally is challenged. The too long didn't read is it feels like a Hail Mary for some liquidity before the squad rolls in. That's probably exactly what it is, right? Circle wants to get on the same level as the banks because the banks are going to create their own stable coin. They're going to try to keep it very closed and wall guarded, and they're going to try to make as much money as they can by lowering costs for their regular transfers. And so this is going to create issues for the likes of Circle because although with USDC, We have trusted stablecoins, long-standing stablecoins, highly integrated and interoperable stablecoins. And the banks probably won't to that level, but it may not matter because the banks have unlimited funding to push and the marketing for their new coin. And think about all the apps that they can just integrate these coins into to eliminate all the fees, or at least, significantly reduce them and make things more efficient. So it is going to be interesting to see how it all plays out. That's probably why they're IPOing now and not selling the company to these other companies, because I do think that consolidation, like Ripple buying Circle, could be good. But I also think that it's important to keep them separated, right? Because if Ripple really thinks that if Ripple is really this amazing new financial company, they need to prove it. Not prove it by buying Circle, right? Prove they have an RLUSD. How many people are using it? Where is it being used? You know, like prove it. But they wanted to buy Circle to bypass all of the hard work it would take to get their stablecoin to the level that Circle is. And so it's going to be really interesting to see how this all plays out for Circle. Meanwhile, Tether, Omar said Tether not particularly worried about the big banks entering the stablecoin arena. Paraphrasing their CEO Paulo Adorino's quote, banks will focus on the Western world while Tether is focused on the unbanked. And so stepping back, the World Bank estimates 1.4 billion adults are unbanked. Tether currently has 20 million active users monthly. At 10%, the unbanked population, that's around 140 million monthly active users, which is 7x their current rate. At the current USD market cap, USTT, whatever, the Tether market cap, modest penetration implies with heavy assumptions, it's a $1 trillion plus dollar asset base. Purely illustrative math, but this highlights that when swim lanes emerge post-regulation, there will be clear vectors for growth that each issuer will lean into. And Tether is not worried because their target market is large, underserved, and lucrative if they can get it. And it's true. If you think about it, Circle is really the US stablecoin. It is the digital dollar. They've even posted that on their own X page saying USDC is the digital dollar. I've told you guys this for years. It was becoming the digital dollar. The Circle has direct connections into the Federal Reserve and into their liquidity facilities. And so Tether, while they probably do want some market share in the US, they don't care because they will go through the rest of the world where they already are the number one stablecoin used on the planet, right? And we've seen a big switch in the US towards USDC from Tether. And so, with USDC now going public and the banks getting involved, the US market is going to be kind of completely covered, but they're not, the US based companies, the banks are not creating these stable coins for cross-border payments in other countries, right? They're creating it for themselves. And so this could really drive Tether usage to a different level. And this brings us to the giant red flag. Now, I do have a separate video specifically where we're going to be going in depth on this, and there's a much longer video. But at the Bitcoin conference of 2025, Michael Saylor was asked if he plans to publish on-chain proof of reserves. And if you guys are not aware, on-chain proof of reserves is just basically a wallet address that shows that the Bitcoin you say you have, you actually have, and it's verified via the blockchain wallet. Now, there's always been a question, is it a good idea or bad idea to publish this info? And what we've seen exchanges doing and different companies and doing is basically showing proof of reserves. Even Bitwise, one of the Bitcoin ETF issuers, on their website, they have every single wallet address. We also know Satoshi's wallet is basically, we know the public address and has 1 million coins in it. And so this is kind of like an ongoing bounty for the Bitcoin network. Can you crack into the Satoshi wallet? Because if you could, the whole network is going to lose trust instantly. And so let's listen to what Michael Saylor said when they asked him this question about proof of reserves at the Bitcoin conference. And I would imagine many Bitcoin maxis are probably pro proof of reserves, right? If you say you have it, show us. That's the point of the Bitcoin network. Let's listen in.
Hey, it's Mr. Saylor, huge fan of everything you've done. Does Strategy have any plans to publish their on-chain proof of reserves?
Yeah, proof of reserve is an interesting thing. Let me make the following point. A lot of people learn stuff from FTX and Mt. Gox, but I'm not sure they learned the things that the institutional community needs to learn going forward. The current conventional way to publish proof of reserves is an insecure proof of reserves. It actually dilutes the security of the issuer, the custodians, the exchanges, and the investors. It's not a good idea. It's a bad idea. It's like publishing the address and the bank accounts of all your kids and your phone numbers of all your kids, and then thinking somehow that makes your family better. It doesn't make your family better. So no institutional grade or enterprise security analyst would think it's a good idea to publish all of the wallet addresses such that you can be traced back and forth, and every future transaction can be traced. I would say, go to AI, put it in deep think mode, and then ask it, what are the security problems of publishing your wallet addresses, and how might they undermine the security of the company over time? It'll write you a book. It'll be 50 pages of security problems. So the problem with proof of reserves, the way that people do it right now, is it's first of all, it's a proof of assets that is insecure, and it is not a proof of liabilities. And so if you really want crypto security,
So you heard it directly from Michael Saylor. Basically, the answer is no. They're not going to post the proof of reserves. And he goes on to say that it's insecure and it's not a good way to prove that you have what you say you have. I fundamentally disagree. I mean, I understand that he may and his advisors may have some concerns about security aspects of posting the wallets. I get that. I totally get that. But again, Satoshi's wallet is public. Bitwise has their wallets up. Grayscale, I believe they also have their wallet. Why would they not post it if they don't have it? I mean, if they do have it. In my other video that I'm going to be posting called The Giant Red Flag, I'm going to explain why I think that this is a huge risk and why the fact that they don't want to publish their proof of reserves tells me either I get the security risk thing, but again, Satoshi's wallet is out there, right? And Michael Saylor may have hundreds of wallets for MicroStrategy. But in the longer video, you'll hear what he says where he talks about, he doesn't want underlying wallets to be tracked. So he's like, if we could just show our overall account balance and no other tracking of these wallets, maybe, or something to that degree. And that tells me, like, are they rehypothecating this Bitcoin? Are they loaning it out? Are they borrowing it out? And remember, Michael Saylor just said here, Wall Street didn't learn. Did we learn from FTX, right? What was FTX doing? They were loaning out, but they were loaning out to other exchanges, and then they were borrowing from those same exchanges. They were borrowing and loaning the same money over and over and over, and probably being highly over leveraged. Where if MicroStrategy is at some point rehypothecating or lending, it's probably going to be a very small portion of their portfolio of Bitcoin. If they have over 500,000 Bitcoin, maybe they'll 10,000 Bitcoin will be rehypothecated. And if not, why is he so concerned with the flow of the funds in those wallets? I don't know. Like I said, it's a risk that we have to at least take into account. And Bitcoin broke all-time record high and no one cares. Retail is gone, FOMO is dead, and greed is missing. This is the most bullish signal that you can get in crypto. And like we've explained, now we're in June. We're in the middle of the year. And based on what a lot of chartists and traders in the market have theorized over the last 30 or 60 days, is that we are going to be entering the markup phase of the cycle in the beginning of June. And now we're in the beginning of June and we're going to see. But typically a markup phase is the parabolic run higher. The markup phase is the banana zone. This is when you can get the most volatility to the upside and the most gains. But you have to remember to take profits out. Otherwise, you're not actually capturing any of those gains. And so when we look at the fear and greed index, now keep in mind, these are not just based on objective sentiment. This is based on subjective, based on wherever you're looking at the fear and greed index. A few different websites meter it or metric it differently. But according to the coin market cap fear and greed index, it is pretty in line with the sentiment in the market, right? How the market feels about the market. And we are kind of moving a little bit away from extreme greed, okay? So this could potentially mean that this is a good buying time and that some of the profit taking is kind of out of the way, or the purchasing is out of the way of retail, right? Of the sentiment makers. Wall Street doesn't care. They're going to keep buying regardless of where the market is. But we have to understand where the fear and greed index is, because the further we get into this extreme greed, this is the sell zone. This is the buy zone. And we always talk about timing the market. It's very difficult to time the market, but if you keep an eye on the fear and greed index, this can give you indicators of when potentially is the good time to buy or sell based on everything else going on in the market that you have researched and looked into. And so that's kind of where we're at. There is so much going on, but it still seems like we are very close to the top of the bull market. With that, hopefully you guys enjoyed today's video. Don't forget to give the video a thumbs up, hit the subscribe button. I'll see you when I see you. Crypto on.